Based on the provided data, the trend for Bitcoin appears to be sideways to slightly bullish. While the price fluctuated within a range, it generally held above the support level of 82,500. The forecast data suggests continued consolidation within this range. A potential entry point could be around 82,800, slightly above the support level, aiming to capitalize on a potential upward move. The stop-loss order should be placed at 82,000 to limit potential losses. The initial target price could be set at 84,000, aligning with a previous resistance level and a reasonable profit target based on the current range. The RSI indicator fluctuated within the neutral range, suggesting neither strong overbought nor oversold conditions. However, the Bollinger Bands indicate a potential for increased volatility in the coming week. If the price breaks above the upper Bollinger Band, it could signal a stronger bullish move, justifying a higher target price. Conversely, a break below the lower Bollinger Band could indicate a bearish reversal, prompting a reassessment of the strategy and potentially a move to a more conservative position. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $294. The forecast data suggests this downtrend may continue, with prices predicted to remain below $331. Given this analysis, a suitable strategy would be to short Bitcoin Cash at the entry price of $333. The stop-loss should be set at $337 to limit potential losses. The target price for this trade could be $294, representing a potential profit of 11.5%. This strategy utilizes the downtrend identified in the historical and forecast data, coupled with the support level as a potential price reversal point. Additionally, the RSI indicator is currently around 47.4, which is not an overbought or oversold territory, suggesting further downside potential. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data which predicts further price drops. The RSI indicator suggests the asset is oversold, potentially indicating a short-term bounce. However, the Bollinger Bands show the price consistently trading below the middle band, reinforcing the downtrend. A strategy capitalizing on this trend would involve selling short Stacks at the current market price around $0.62. The stop-loss order should be placed at $0.64, above the recent resistance level, to limit potential losses. The target price could be set at $0.57, aligning with the support level identified in the historical data and the projected price movements. This strategy combines the insights from the trend analysis, RSI oversold signal, and Bollinger Band confirmation to capitalize on the potential for further price decline in Stacks. Based on the provided data, Ethereum appears to be in a downtrend with potential for further decline. The historical price data shows a consistent downward movement, supported by the lower support price and the RSI consistently hovering below 50, indicating bearish sentiment. The forecast data also suggests a continued downward trend in the coming week. Therefore, a bearish strategy is recommended. Enter a short position at the market price around 1930. Set a stop-loss order at 1980 to limit potential losses. The target price is set at 1850, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish momentum and technical indicators to generate potential profits from the downtrend. Based on the provided data, XRP appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a defined range, with support around 2.29 and resistance at 2.54. The forecast data suggests continued consolidation within this range, with potential for a slight upward push. A suitable strategy could involve a buy entry at 2.29, the identified support level, with a stop-loss placed at 2.25 to limit potential losses. The target price could be set at 2.54, the resistance level, aiming for a potential profit of approximately 11%. This strategy leverages the potential for a breakout from the current range, while managing risk with a tight stop-loss. Based on the provided data, Binance Coin appears to be in a bullish trend. The historical price data shows a general upward movement, and the forecast data suggests continued growth. The support price of $602 provides a strong foundation for this bullish outlook. Therefore, a long position is recommended. We can enter the market at $618, a price near the recent support level. A stop-loss order should be placed at $602 to limit potential losses. The target price for this trade is $637, based on the forecast data and the upward trend. This strategy combines the bullish trend, support level, and forecast data for a potentially profitable trade. Based on the provided data, Stellar appears to be in a sideways trend with a slight upward bias. The historical price data shows a range between the support level of 0.262 and the resistance level of 0.346. The RSI oscillates between oversold and overbought levels, suggesting indecision in the market. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a conservative strategy could involve entering a long position when the price breaks above the resistance level of 0.346 with a stop-loss placed at the recent swing low around 0.262. A target price could be set at 0.37, based on the previous highs. Alternatively, a strategy utilizing the RSI could look for a buy signal when the RSI dips below 30, with a stop-loss placed at the recent swing low and a target price set at the resistance level. The Bollinger Band strategy suggests waiting for a price breakout above the upper band with a stop-loss placed below the recent swing low and a target price set at 2 standard deviations above the breakout point. Based on the provided data, Toncoin appears to be in an uptrend. The historical price data shows a consistent upward movement, and the forecast data suggests this trend will continue. The support level of 3.45 provides a solid foundation for potential long positions. A suitable strategy would be to enter a long position when the price touches the support level of 3.45. The stop-loss order should be placed at 3.40, providing a buffer against potential price reversals. The target price could be set at 3.71, the resistance level, aiming to capture the full potential of the uptrend. Additionally, consider utilizing the RSI indicator. When the RSI dips below 20, indicating an oversold condition, it could signal a buying opportunity. Conversely, when the RSI surpasses 80, indicating an overbought condition, it might be prudent to take profits or reduce exposure. Based on the provided historical and forecast data, Cardano appears to be in a sideways trend with a slight downward bias. The support level at $0.673 is holding strong, while the resistance at $0.803 is proving difficult to break. The RSI indicates that the asset is not overbought or oversold, hovering around the neutral level of 50. The Bollinger Bands are relatively tight, suggesting low volatility. Therefore, a conservative strategy would be to wait for a clear break above the resistance level at $0.803. A buy entry could be triggered at $0.805 with a stop-loss order placed at $0.724, the recent low. The initial target price could be set at $0.85, with further upside potential if the momentum continues. It's important to note that this is a speculative trade and market conditions can change rapidly. Always manage your risk and consider your own investment goals and risk tolerance before making any trading decisions. Based on the historical and forecast data provided, Litecoin appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests continued downward movement. The support price at $90.1 provides a potential floor for the price, while the resistance at $94.1 acts as a ceiling. Considering the RSI, which is currently hovering around 38, suggests that the asset is not oversold. However, the Bollinger Bands indicate that the price is trading close to the lower band, suggesting potential for further downside. Therefore, a short position could be considered with an entry price at $92, a stop-loss at $93, and a target price at $88. This strategy aims to capitalize on the potential continuation of the downtrend while managing risk with a tight stop-loss. Based on the provided data, Swaycoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The support level at $2.1 is acting as a temporary floor, but the resistance at $2.6 is proving difficult to overcome. A good entry point for a short position would be around $2.28, which is slightly above the recent low and offers a potential risk-reward ratio. The stop-loss order should be placed at $2.35, slightly above the entry price to minimize potential losses. The target price could be set at $2, which represents a significant drop from the entry price and aligns with the overall downtrend. This strategy utilizes the downtrend and the support/resistance levels to identify a potentially profitable short position. The RSI indicator is currently hovering around 40, suggesting that the asset is not oversold and there is room for further decline. The Bollinger Bands are also narrowing, indicating a potential for a breakout in either direction. However, given the overall downtrend, a short position seems more likely. Based on the provided data, Aptos appears to be in a downtrend. The historical price data shows a consistent decline, with the closing prices gradually decreasing over the past 2 weeks. The forecast data also suggests a continuation of this downtrend, with predicted prices remaining below the recent highs. The support and resistance levels further reinforce this bearish outlook, with the support price at $5.45 acting as a potential floor for the price. A buy position could be considered if the price rebounds from the support level and breaks above the resistance level of $6.2. However, given the prevailing downtrend, a more prudent strategy would be to initiate a short position. A suitable entry price for a short position would be around $5.6, with a stop-loss order placed at $5.7 to limit potential losses. The target price for this short position could be set at $5.4, aiming to capitalize on the expected price decline. This strategy leverages the downtrend momentum and utilizes the support level as a potential price reversal point. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicator, while fluctuating, remains below 50, indicating bearish sentiment. The Bollinger Bands are also converging, suggesting a potential continuation of the downtrend. Therefore, a suitable strategy would be to enter a short position when the price touches the resistance level of $0.202. The stop-loss order should be placed at $0.206 to limit potential losses. The target price could be set at the support level of $0.182, aiming for a potential profit of $0.02 per share. This strategy leverages the downtrend, RSI bearishness, and Bollinger Bands convergence to maximize potential returns while managing risk. Based on the provided data, Ethereum Classic appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, and the forecast data suggests this trend may continue. The RSI is currently hovering around 42, indicating that the asset is not oversold. However, the price has been testing the support level of $16.9, which could act as a potential buying opportunity. A long position could be initiated if the price rebounds from this support level. A suitable entry price would be around $16.9, with a stop-loss order placed at $16.6 to limit potential losses. The target price could be set at $18.6, which represents the recent resistance level. This strategy utilizes the support and resistance levels, and the stop-loss order helps manage risk. It is important to note that this is just one possible strategy, and other factors should be considered before making any investment decisions. Based on the provided data, Polygon appears to be in a downtrend. The historical prices show a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is hovering around 30, suggesting oversold conditions, but the Bollinger Bands show a narrowing trend, indicating a potential for a volatile breakout. Considering these factors, a short position could be initiated with an entry price near 0.215. The stop-loss should be placed above the recent high at 0.22, and the target price could be set at 0.19, aligning with the predicted forecast lows. However, given the narrowing Bollinger Bands, a close watch is needed for any signs of a reversal, as a sudden breakout could invalidate this strategy. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from 0.126 to 0.12. The forecast data also suggests further price decline in the coming week. The RSI indicator is hovering around 40, indicating that the asset is not oversold but also not overbought. The Bollinger Bands are contracting, suggesting a potential breakout in either direction. Considering these factors, a bearish strategy could be implemented. A potential entry point would be at 0.118, the predicted price for March 22. The stop-loss order should be placed at 0.12, slightly above the recent high and the upper Bollinger Band. The target price could be set at 0.108, the identified support level. This strategy aims to capitalize on the anticipated downtrend while managing risk with a tight stop-loss order. Based on the provided data, optimism appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating within a range, with support around 0.832 and resistance around 0.98. The RSI indicates that the asset is not currently overbought or oversold, hovering around the neutral level of 40. Looking at the Bollinger Bands, the price is currently trading near the lower band, suggesting potential for a bounce back towards the middle band. Therefore, a potential long position could be initiated around 0.845, with a stop-loss set at 0.832 to protect against a further decline. The target price could be set at 0.90, aiming for a profit of approximately 6%. This strategy utilizes the potential for a bounce from the lower Bollinger Band and the support level. It's important to note that this is just a suggestion based on limited data, and further analysis and risk management considerations are crucial before making any investment decisions. Based on the provided data, STRK appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices indicate further downward movement. The support price of $0.146 acts as a potential floor, while the resistance price of $0.181 caps the upward potential. Considering these factors, a short position could be considered. A suitable entry price would be around $0.175, with a stop-loss order placed at $0.146 to limit potential losses. The target price could be set at $0.142, based on the forecast and the observed downtrend. The RSI indicator suggests that the asset is oversold, which could indicate a potential short-term rebound. However, the overall downtrend and the forecast data suggest a continuation of the downward movement. The Bollinger Bands also indicate a potential for further price decline as the price is trading close to the lower band. Therefore, while the RSI may signal a short-term oversold condition, the overall trend and the Bollinger Bands suggest a stronger probability of a continued downtrend. Based on the provided data, Solana appears to be in a short-term downtrend. The price has been consistently below the resistance level of $135 and is moving closer to the support level of $125. The RSI indicator is hovering around the neutral level, suggesting a potential for further price decline. The Bollinger Bands are also narrowing, indicating a period of consolidation before a potential breakout. A potential strategy could be to enter a short position when the price breaks below the support level of $125. The stop-loss order should be placed above the recent high, around $128. The target price could be set at the next support level, around $116. This strategy capitalizes on the downtrend and utilizes the RSI and Bollinger Bands to identify potential entry and exit points. It's important to note that this is just a suggestion and should be carefully considered before making any trading decisions. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The support level of 0.491 remains a key factor, acting as a potential floor for the price. Given this downtrend, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at 0.505 to limit potential losses. The target price for this trade is 0.47, aiming to capitalize on the projected price decline. This strategy utilizes the identified downtrend and support level to guide the entry and exit points. Based on the provided data, render appears to be in a sideways trend with slight downward pressure. The historical price data shows fluctuations within a relatively narrow range, and the forecast data suggests a continued consolidation. The support price of $3.11 acts as a strong floor, while the resistance at $3.7 caps potential upward movements. Considering these factors, a conservative strategy would involve waiting for a clear break above the resistance level before entering a long position. A potential entry point could be around $3.7, with a stop-loss order placed below the support level at $3.11. The target price could be set at $4.2, aiming for a 15% return. Alternatively, a short position could be considered if the price convincingly breaks below the support level. The entry price for a short position would be around $3.05, with a stop-loss order placed above the recent swing high at $3.22. The target price for a short position could be set at $2.8, aiming for a 10% return. Based on the provided data, Solana name service appears to be consolidating within a range. The historical price data shows a fluctuating trend with support around 0.102 and resistance at 0.153. The forecast data suggests a potential slight downward movement in the coming week. Considering the RSI indicator, which oscillates between 20 and 80, we can identify potential oversold and overbought conditions. The Bollinger Bands, indicating price volatility, suggest that the price might be nearing the lower band, potentially indicating a buying opportunity. Therefore, a long position could be considered when the price approaches the support level of 0.102 with a stop-loss order placed below the recent low at 0.0992. The target price could be set at the resistance level of 0.153. Based on the provided historical and forecast data for Doge-Coin, a potential strategy emerges. The price has been generally trending downwards, with support at 0.155 and resistance at 0.178. The forecast suggests this downtrend might continue, with prices potentially dipping below the support level. Therefore, a bearish position could be considered. A suitable entry point would be around 0.165, the predicted price for March 22. The stop-loss order should be placed at 0.178, the resistance level, to limit potential losses. The target price could be set at 0.145, a level significantly below the current price and potentially achievable within the predicted timeframe. This strategy leverages the potential for further price decline and aims to capitalize on the downtrend. Based on the provided data, PEPE shows a potential upward trend. The historical price data, coupled with the forecast, suggests a gradual increase in price over the next week. The support price at $0.0000710 provides a strong base for potential buying opportunities. We can initiate a long position when the price rebounds from the support level and crosses above the resistance level of $0.0000960. A suitable entry price would be $0.0000720. To manage risk, we will set a stop-loss order at $70.06, which is slightly below the support level. Our initial target price is set at $0.0000760, representing a potential 6.9% gain. We can adjust the stop-loss and target prices as the trade progresses based on market conditions and price action. This strategy leverages the upward trend, support level, and resistance level to generate potential profits while mitigating risk through a well-defined stop-loss order. Based on the provided historical and forecast data, SHIB appears to be in a slight upward trend. The support price of $0.0000115 remains relatively stable, while the resistance price of $0.0000131 has been tested several times. The RSI indicates that the asset is not overbought or oversold, suggesting potential for continued growth. Considering these factors, a long position can be initiated when the price breaks above the recent resistance level of $0.0000131. The entry price for this position would be $0.00000131. A stop-loss order should be placed at $0.00000115, protecting against a potential reversal. The target price for this trade is set at $0.00000135, aiming for a 3% profit. Based on the provided historical and forecast data for dog with hat, a potential investment strategy can be formulated. The price trend appears to be fluctuating within a range, with support at $0.43 and resistance at $0.517. The RSI indicator suggests a potential oversold condition in the near term, as it has dipped below 30. Considering these factors, a long position could be initiated when the price rebounds from the support level of $0.43. A stop-loss order should be placed at $0.42 to limit potential losses. The initial target price could be set at $0.48, which represents a potential upside of 11.6%. As the price moves closer to the target, the stop-loss order could be moved up to break even to protect profits. Further upside potential could be explored if the price manages to break through the resistance level of $0.517. Based on the provided data, Doge-Coin appears to be in an upward trend. The historical price data shows a consistent climb, and the forecast data suggests this trend will continue. The support price of 0.00235 acts as a solid foundation, while the resistance price of 0.00317 presents a potential ceiling. Therefore, a long position strategy is recommended. Enter a buy order at 0.00236, the first forecast price. Set a stop-loss order at 0.00235, the support price, to limit potential losses. Target a profit at 0.00252, the highest price in the last 2 weeks of historical data. This strategy leverages the upward trend and uses technical indicators to manage risk. Based on the provided data, Near Protocol appears to be in a short-term downtrend. Historical prices show a consistent decline over the past 2 weeks, with the price hovering around the support level of $2.52. The forecast data also suggests a continued downward trajectory, with prices predicted to remain below the recent highs. Considering this, a bearish strategy might be appropriate. A potential entry point could be around $2.60, close to the predicted price for March 22. A stop-loss order should be placed at $2.65 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $2.45, aligning with the recent support level and the overall downtrend. This strategy leverages the potential for a continuation of the downtrend, aiming to capitalize on the price decline while managing risk through a defined stop-loss order. Based on the provided data, Internet Computer appears to be in a slight downtrend. While there were some upward movements, the overall price action suggests a bearish bias. The forecast prices for the coming week also indicate a potential decline. Therefore, a short position strategy is recommended. We can enter a short position at the current market price around $5.99. The stop-loss order should be placed at $6.05 to limit potential losses. The target price for this trade is $5.35, which is based on the forecast price and support level. This strategy utilizes the potential downtrend and incorporates risk management with a defined stop-loss. Based on the provided data, Injective appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices continue this downward trajectory. The RSI indicates that the asset is oversold in the recent past, suggesting potential for a short-term rebound. However, the overall trend and the forecast prices point towards further downside potential. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss set at the recent high of $10.3. The target price is set at $8.76, which aligns with the predicted low for March 24. This strategy capitalizes on the downtrend while mitigating potential losses by using a tight stop-loss. Based on the provided historical and forecast data, BTC appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The support level at $225 provides a potential floor for the price, while the resistance level at $262 acts as a significant hurdle. Considering this downtrend and the support level, a bearish strategy could be employed. A potential entry point for a short position could be around $250, with a stop-loss order placed at $225 to limit potential losses. The target price could be set at $220, aiming to capture the projected downward movement. Additionally, the RSI indicator, currently hovering around 40, suggests that the asset is not yet oversold. However, a move below 20 could signal an even stronger bearish signal. The Bollinger Bands, with the price trading below the middle band, further support the bearish outlook. Based on the provided data, THETA network shows a potential upward trend. The price has been consolidating around the support level of $0.815 and is showing signs of breaking above the resistance level of $1.08. The forecast data also suggests a potential increase in price. Therefore, a long position can be considered. We can enter a long position at the current market price around $0.963. The stop loss can be placed at the recent support level of $0.815 to limit potential losses. The target price can be set at the resistance level of $1.08 for a potential profit of around 12%. This strategy leverages the potential upward trend and the RSI and Bollinger Bands indicators. Based on the provided data, WorldCoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding near 0.756. The forecast data suggests this downtrend may continue in the coming week. Given these observations, a short position could be considered. A suitable entry price would be around 0.830, slightly above the recent lows and within the range of the forecast prices. To manage risk, a stop-loss order should be placed at 0.869, above the recent resistance level and the high of the last week. A target price of 0.756, the identified support level, could be set for potential profit. In addition to the trend analysis, the RSI indicator suggests potential overbought conditions in the short term. The RSI has been hovering around 40, which is above the oversold level of 20. However, it's important to note that the RSI is not a standalone indicator and should be used in conjunction with other technical analysis tools. The Bollinger Bands, while indicating a potential for volatility, do not provide a clear signal for entry or exit. Therefore, the primary strategy will focus on the downtrend and support/resistance levels, with the RSI serving as a secondary confirmation. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the short term. The RSI is currently hovering around 40, indicating a neutral sentiment, but the price action suggests a potential for further downside. A good entry point for a short position would be around 0.145, with a stop-loss placed at 0.154 to limit potential losses. The target price could be set at 0.129, the identified support level, which represents a potential 12% return on investment. Alternatively, a strategy based on the RSI could be employed. When the RSI falls below 20, it signals an oversold condition, presenting a potential buying opportunity. However, given the current downtrend, waiting for a clear reversal signal and a bounce off the support level at 0.129 would be a more prudent approach. If the price rebounds from this level, a buy order could be placed with a stop-loss at 0.126 and a target price at 0.145. The Bollinger Bands also offer insights, as a price break below the lower band could indicate further downward momentum. However, it's crucial to consider the overall market context and avoid solely relying on technical indicators. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from 0.603 to 0.505. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below 0.55 for the upcoming week. Considering these factors, a bearish strategy is recommended. A good entry point for a short position would be around 0.52, the current resistance level. The stop-loss order should be placed at 0.55, slightly above the recent high, to limit potential losses. The target price could be set at 0.46, the identified support level, aiming for a potential profit of approximately 11%. This strategy leverages the downtrend and potential support level to maximize returns while minimizing risk. Based on the provided data, Polkadot appears to be in an upward trend. The historical price data shows a consistent increase, and the forecast data suggests this trend will continue. The support price at 4.32 provides a strong foundation for this bullish outlook. The RSI, while currently in neutral territory, has been trending upwards, indicating potential for further buying pressure. Given this information, a potential long position could be initiated with an entry price around 4.37, the closing price on March 21st. A stop-loss order should be placed at 4.32, the support level, to limit potential losses. The target price could be set at 4.55, the high point of the forecast period, aiming for a 4% profit. This strategy leverages the upward trend, support level, and positive RSI momentum. Based on the provided data, Filecoin appears to be in a sideways trend with a slight upward bias. Historically, the price has fluctuated between the support level of 2.84 and the resistance level of 3.06. The forecast data suggests a continuation of this sideways trend with prices potentially dipping slightly in the coming week. A suitable strategy would be to enter a long position when the price breaks above the resistance level of 3.06. The stop-loss order should be placed at the recent swing low of 2.84, limiting potential losses. The target price could be set at 3.2, representing a potential upside of 5%. This strategy leverages the potential for an upward break while mitigating risk with a tight stop-loss. Based on the provided historical and forecast data, Conflux appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests a continuation of this trend. The support price of 0.0833 acts as a potential floor, while the resistance at 0.102 presents a significant hurdle. Therefore, a bearish strategy is recommended. A suitable entry point would be at the support level of 0.0833. The stop-loss order should be placed above the recent high of 0.0911 to limit potential losses. The initial target price could be set at the next support level, which is around 0.0777. This strategy leverages the downtrend and aims to capitalize on the potential price decline. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, currently around 35, is not oversold, indicating there may be room for further decline. The Bollinger Bands are narrowing, suggesting a potential breakout in either direction. However, given the overall downtrend, a breakout below the lower Bollinger Band would be more likely. Therefore, a conservative strategy would be to enter a short position at the market price, with a stop-loss order placed above the recent high of 17.9 and a target price set at 14.0, the lower Bollinger Band. This strategy aims to capitalize on the ongoing downtrend while managing risk by placing a stop-loss order to limit potential losses. It's important to note that this is just a suggestion, and further research and analysis are always recommended before making any investment decisions. Based on the provided data, Avalanche appears to be in a short-term downtrend. The price has been consistently declining over the past 2 weeks, with the recent forecast suggesting further downward movement. The RSI indicator is currently hovering around 40, indicating that the asset is not oversold. However, the Bollinger Bands suggest a potential for volatility in the coming week. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $18.8, which aligns with the support level and the predicted price movement. The stop-loss order should be placed above the recent high at $19.8 to limit potential losses. The target price for this trade could be set at $17.5, which represents a reasonable profit target based on the historical price action and the forecast data. This strategy utilizes both the price trend and the support/resistance levels, as well as the predicted price movement. Based on the provided historical and forecast data, Doge-Coin appears to be in a consolidation phase. The price has been fluctuating between the support level of 0.0243 and the resistance level of 0.0268. The RSI indicator suggests that the asset is not oversold or overbought, indicating a neutral sentiment. The Bollinger Bands are relatively tight, suggesting low volatility. Considering these factors, a conservative strategy could involve waiting for a clear breakout above the resistance level of 0.0268. A potential entry price could be set at 0.0270, with a stop-loss order placed at 0.0245 to limit potential losses. The target price could be set at 0.0300, aiming for a potential 11% gain. This strategy utilizes the breakout potential and manages risk effectively. Based on the provided data, PENDLE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement. The RSI, currently at 49.3, suggests the asset is not oversold. However, the Bollinger Bands indicate a potential for a price bounce as the price is nearing the lower band. Therefore, a conservative strategy would be to wait for a bounce near the lower Bollinger Band, around 2.33, and enter a long position. A stop-loss order should be placed at the recent swing low, around 2.28, to limit potential losses. The target price could be set at the upper Bollinger Band, around 2.85, for a potential profit of 22%. This strategy focuses on capitalizing on the potential for a short-term rebound while minimizing risk. Based on the provided historical and forecast data, the sandbox appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level of $0.259 is likely to hold, acting as a floor for the price. A long position could be considered if the price rebounds from the support level and shows signs of reversal. A suitable entry price for a long position would be around $0.260, with a stop-loss order placed at $0.258 to limit potential losses. The target price could be set at $0.295, aiming for a potential profit of approximately 13%. This strategy utilizes the support level as a potential entry point and sets a conservative stop-loss to manage risk. Based on the provided historical and forecast data, Decentraland appears to be in a short-term sideways trend. The price has fluctuated between the support level of 0.257 and the resistance level of 0.314. The RSI indicates that the asset is neither overbought nor oversold, hovering around the neutral level of 50. The Bollinger Bands are relatively tight, suggesting low volatility. Considering these factors, a conservative strategy could involve waiting for a clear breakout above the resistance level of 0.314 to initiate a long position. The entry price would be set at the breakout point, with a stop-loss order placed below the recent swing low, around 0.257. The target price could be set at 0.35, aiming for a potential upside of 11%. This strategy relies on a break of the current range and a continuation of the upward momentum. Based on the provided data, ENG coin shows a slightly bearish trend with potential for consolidation. The historical price data, coupled with the forecast prices, suggests a downward movement in the coming week. The RSI indicator, currently around 39, indicates that the market is not oversold, but it is also not strongly bullish. Therefore, a conservative strategy could involve a short position entry at the resistance level of $0.095. The stop-loss order should be placed above the recent high at $0.097, and the target price could be set at the support level of $0.087. This strategy leverages the potential downward movement while managing risk effectively. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator is currently hovering around 44.6, suggesting the asset is not oversold. However, the price is approaching the support level of 5.87, which could act as a potential buying opportunity. Therefore, a long position could be considered with an entry price at 5.87. The stop-loss order should be placed below the support level at 5.72 to limit potential losses. The target price could be set at 6.7, based on the forecast data and the historical price action. This strategy incorporates the support level and the price forecast, aiming to capitalize on a potential rebound in the price. Based on the provided data, Chainlink appears to be in a sideways trend with a slight downward bias. The historical price action shows consolidation around the support level of $12.7, with resistance near $14.4. The forecast data suggests a continuation of this trend, with prices potentially dipping towards the support level. The RSI indicator is currently hovering around 44, indicating that the asset is neither overbought nor oversold. Considering the above, a potential strategy could involve a long position with an entry price around $13.2, which is slightly above the recent lows and below the resistance level. A stop-loss order should be placed at $12.7, protecting against a significant price drop. The target price could be set at $14.4, representing a potential upside of approximately 8%. This strategy combines the observation of the sideways trend with the support and resistance levels, aiming to capitalize on a potential bounce from the support level. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $164 on several occasions. The forecast data also suggests further price decline in the coming week. Considering these factors, a short position could be considered. A suitable entry price would be around $168, with a stop-loss order placed at $170 to limit potential losses. The target price could be set at $155, aiming to capitalize on the expected downtrend. Additionally, the RSI indicator, currently around 43, suggests the asset is not significantly overbought or oversold. However, a dip below 30 could signal an oversold condition and potentially provide an additional entry point for a short position. Based on the provided data, EOS appears to be in a sideways trend with a slight upward bias. The price has been oscillating between the support level of 0.55 and the resistance level of 0.614. The RSI indicates that the asset is not overbought or oversold, hovering around the neutral level of 50. The Bollinger Bands are relatively tight, suggesting low volatility. Considering these factors, a conservative strategy could involve entering a long position when the price breaks above the resistance level of 0.614. The entry price would be 0.615, with a stop-loss order placed at 0.55, the support level, and a target price set at 0.65, a potential upside target based on historical price action. This strategy aims to capitalize on the potential upward momentum while minimizing risk. Based on the provided data, Tron appears to be in a downtrend with potential for further decline. The historical price data shows a consistent downward movement, supported by the falling RSI and the price consistently trading below the 20-day moving average. The forecast data also suggests a continuation of this downtrend. A good entry point for a short position could be around 0.234, with a stop-loss set at 0.238 to limit potential losses. The target price could be 0.222, based on the support level and the overall downtrend. The RSI indicator is currently hovering around 50, suggesting the asset is neither overbought nor oversold. However, a potential short opportunity could arise if the RSI falls below 30, indicating oversold conditions. Bollinger Bands show narrowing price action, which could signal a potential breakout in either direction. In this case, a break below the lower band could confirm the downtrend and provide a further signal to enter a short position. Based on the provided data, Suncoin appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating between the support level of 0.0165 and a resistance level of 0.0183. The RSI indicator is currently hovering around 46, suggesting that the asset is neither overbought nor oversold. A potential strategy could involve a long position with an entry price at 0.0165, the support level, a stop-loss price at 0.0160, below the recent lows, and a target price at 0.0183, the resistance level. This strategy aims to capitalize on a potential upward breakout from the current range. However, it's important to note that the trend is uncertain, and the price could easily continue to consolidate or even decline. Therefore, risk management is crucial, and the position size should be adjusted accordingly.